One of the obstacles to start trading as a beginner is lack of capital and lack of money to start investing with. Today, we're discussing about one of the most powerful and yet dangerous trading tool, and the tool is called leverage. You probably heard about other traders saying that I flipped $1,000 into $10,000 or $100,000. And this is exactly where leverage plays a major role. But what they don't tell about is that leverage can potentially lose the money just as fast as make the money. So, in this video, I'll break down exactly what leverage is and how to use in your advantage. Leverage is the capital, the amount of money that the broker is willing to lend in order for you to trade with a larger amount, even though you don't actually own this amount you wanna invest, you wanna play with. So, let's suppose you wanna start investing with $1,000 and the broker gives you the leverage. Leverage size is the most common 110, 120, 150, and 100. So let's say you started to invest $1,000. With 110 leverage size, you get $10,000 worth of money to play with. With 120, let's suppose you invest $1,000 again, you get $20,000 worth of playing. And with $1,000 investment in 150, you have $50,000 worth of money to play with. So these four leverage size are the most commonly used leverage size by brokers. And the last one is if you have $1,000 to invest with 100 leverage size, it means that you get $100,000 to play with. So $100,000 worth of money to play with. How leverage works. Let's say you have $100 to start investing with. You decide to put $100 into a broker firm and you want to start day trading immediately. With 10x leverage, you can trade as if you had $1,000 because 100 times 10 is $1,000. 10 is the leverage size the broker gives you the opportunity to leverage that kind of money you put in. So, you're borrowing the extra 900 from the exchange or broker in this case. So if the price goes up by 10%, your $1,000 trade becomes $1,100 trade. So it means that you made $100 profit. However, the complete opposite is when you lose money. Losing money with that kind of leverage that broker gives it to you is a complete devastating for your entire account. Why? Because you're not using anymore that kind of leverage of the small account that you started with, but you're using the big leverage that the broker is willing to give you. So basically, you're risking your entire account for that kind of big move that the broker gives it to you. As we know, using leverage in day trading gives you a lot of opportunities and has many advantages, which are bigger profits with less money and also more trading opportunities. Now we're gonna tie this second one to this fourth one, that you can short the market, and this is very important that it doubles the amount of opportunity you have to trade. So let's go back to the third one. The third one says that you can experience short-term gains. Why? Because you are able to play with bigger money, and for this reason you are able to capitalize much faster. Now, the most important part in day trading is to be able to not lose money and always stay in the game. So in order to not lose money in day trading, you need to be aware of disadvantages of leverage, since leverage we know that it is very, very risky. So the disadvantages are high risk, liquidation risk, it is very stressful and volatile, and also requires a lot of skill and discipline that a beginner trader has a lot of work to do in order to go to that level. Also, because you're using bigger balance with leverage, the fees can add up more than with a small balance that you started with. Now that you guys know what leverage is, with enough caution, you can use it in your own advantage and be able to capitalize much faster. But you need to keep in mind that protecting your capital comes first in trading. So always try to stay disciplined and in the zone. I'll see you guys next video. Thank you very much for watching and peace out.